Los Angeles, California, the Bay Area, and somewhere in the islands of Hawaii. So we're continuing our partnership with Mercury and our good friend Shelley, and have really enjoyed getting to know some of the firms that are using Mercury as a banking facility. And it's far, far more than that. We'll talk a little bit more about that later, but we're super enjoying the opportunity to get to know some of their customers in the context of firms that would appeal to, and the family office investor community would like to get to know. And Suman and AiSprouts VC joined us on a call with a couple of other of the folks that will be also having singular presentations in the coming weeks. And so again, Shelley, thank you. Super glad to be enjoying not only our friendship, but our business relationship together. And we're really glad. Also today, in addition to Suman and AiSprouts, is a guest who is an investor in the fund. So we can hear directly from somebody who's been willing to vote with their checkbook and why they might do that. So why they had done that. So we're really glad to have everybody here. We have recording this, and we'll share it with you post webinar. We'll also put you in direct touch with Suman if you care to be an investor and learn more. And of course, our agenda here is to talk about Suman, and also for you to get to know Mercury if appropriate as well. Full disclosure, we're a customer as well, and we've enjoyed being one. So there's a little commercial. Throughout the webinar today, if you have any questions, please post them to the chat or the Q&A. We're not going to have you speak on the program, but we'll definitely get to as many of the questions as possible. We got a lot of folks coming on today, so we'll get to as many as we can, but feel free to post them as they come to mind, and we'll get to them in that order. And also, if there's anybody that you think would enjoy hearing what you hear today, you can get the recording on either the Family Office Insights YouTube channel, or perhaps Suman will post it somewhere on their website. And feel free to communicate directly with them. So with that, Shelley, you want to open us up here?
Yeah, absolutely. I also want to quickly introduce my colleague Puya, who's listed as me, but his name is Puya, and he'll change his name on Zoom.
There you changed it. Yeah, good.
Yeah, there we go. Hi, everyone. Thank you so much for joining. My name is Shelley. I am a director of relationship management at Mercury. I work with scaling high growth venture-backed startups and companies, Series A+, getting further and further into the Series B territory. And my role is to connect them to opportunities, to banking, to advisory, and then also leverage my own background of network connections to enhance their experience on Mercury. So Arthur and I go way back through my past working in startups and accelerators, and really excited that we could make this opportunity available through FOI to the Mercury community. We also do bank family offices, VCs. We have a number of features that are dedicated to VC clients, and my colleague Puya is specifically working primarily with our VC clients and their unique needs. I'll give him a couple minutes to talk about that.
Good morning, everyone. As Shelley mentioned, Puya, part of the relationship management team here at Mercury. Been here for about almost a year, and primary focus is working with our investor cohort, specifically the emerging managers, such as Suman, and getting our emerging managers in front of opportunities such as the Family Office Insights opportunity here today, and building the network and really establishing a Mercury brand within the ecosystem of the startup ecosystem. So excited to be here. Thank you for having us.
Thanks, Puya. Okay, Suman, you want to do?
Great. Yeah, perfect. Thank you, Arthur. Thank you, Shelley. Thank you, Puya, for having me on. Just brief introduction, and then Let me know when I should get into the deck, though. Right, this is just the setup. But yeah, Suman Talukdar, I manage and run this boutique Silicon Valley venture fund focused on AI, which is AiSprouts. Have been investing on thesis since 2020, which is when really AI became more capital efficient. And looking forward to telling you more about what I'm up to. I will just briefly have one of my LPs also introduce himself, and then I'll get into the deck. Vera, do you want to just briefly introduce yourself?
Yeah, hi, I'm Vera Panathinaikon. I'm an LP in Suman's fund based out of Hawaii.
Perfect. Thanks, Vera. All right. So the way I thought I'd set this up is, I'll plan to get into about 20, 30 minutes of overview. I can't actually see if I can see the Q&A. Yeah, I can't see it. I can, if you have questions that come up, just to make this a little bit more interactive, if you could either put them on the chat or send them to Shelly, that'll help me kind of guide where I should go. But really, I hope that you have a clear sense of what we're doing here with the fund after this discussion. I am raising, so I'm closing my second vehicle now, about half subscribed, looking to fill the last probably 2 million. I've carved out 2 million for institutional investors, and the minimum is 100K. So if you're interested, obviously would be great to chat. But more importantly, with these conversations, I look to really build out the community and the ecosystem that supports the fund. So as an introduction, so AiSprouts is, like I said, a Silicon Valley-based boutique venture fund. I focus on what I call post-traction AI companies. So these are companies that have some sort of demonstrated revenue or product that's delighting a customer. And I'm predominantly investing in products and services that I call are advancing human potential. So think about this new digital fabric that's being constructed by AI that's going to be the operating system for humanity. There's lots of different companies that are popping up, and I'm investing in these. And so typically they're in the seed stage. They have some sort of Silicon Valley story. The majority are based here, and I co-invest with the best funds. So I have about 12 to 20, a couple of dozen different funds that I collaborate closely with. And the result from the first fund so far have been, this is a 2020 vintage, 27 investments. Those companies have raised north of 150 million in follow-on capital. So amazing growth there. The markups between my investments and the latest rounds have been anywhere between 5 to 22 times. So clearly validating the ability to get some really amazing value, capture some value. And so now the second fund, which I'm closing, is basically repeating the same thesis, slightly larger check size, and looking to replicate the same results. So I'm going to get into more details about exactly what that is. But before jumping into it, I wanted to kind of give you a sense of the team. So I was the founder. I've been a Silicon Valley investor and operator now for almost a decade. The unique sort of perspective that I bring comes from now this AI track record, because I kind of spotted this thing happening early. Experience working with amazing people from various unicorn roles, and then previous private equity background. With the AI track record, now with the first fund, there's over 30 different portfolio CEOs that I work with on a daily, weekly basis. This has given me amazing perspectives into what really makes this space work. And then early on in my career, I actually built a lot of this stuff when I was research. One of my early mentors who's now involved with the fund, was one of the founders of Siri, Adam Chire. And as I progressed in my career, I was able to see really what made some of these amazing companies successful. I was fortunate to be involved with 3 that were experienced amazing growth. One's Cloudflare, currently, at one point it was 50 billion market cap. Now it's at 20 billion. I joined the company as it scaled up, employees about 6 times. Anaplan recently went public, but I saw it through its IPO of 2.7 billion. And then Clearwell was really the first company I was involved with. This was post the financial crisis at an exit to Symantec. So really kind of this network that I curated from these experiences is what I bring to the table. This rounds out kind of a broader network that includes a great network, Ivy League schools, et cetera. And then previous work that I'd done on innovation theory that really expanded my access to, I think, insights that other people don't have. So briefly, just to, and Veerapan can give you a sense of the type of, LPs that are attracted to my group. The network really attracts the best of the best. The core advisors include Adam, who's now, sold his third company to Airbnb. First two were Siri to Apple, Viv to Samsung. Forrest is an advisor, mentor for 20 years. He's a Rice alum. He's been at NEA for a long time, has seen a lot of these cycles play out. And then broadening out with Michelle and Louis, this really is this network that includes, amazing founders, executives, GPs at other funds, contacts at academic institutions. And obviously now after two funds, my LP community, which includes, former founders and VCs from firms, including, Kleiner, et cetera. So just to give you a sense of what really attracts, folks beyond just the investment returns to really join the community, I invited Vera here, who's been with the fund since the early days, and he can give you a little bit of a sense for his experience so far.
Cool. Thanks, Suman. Hi, everyone. So, earlier, I'm Veerapan Snanakan. I'm an LP in both of Suman's funds. I have north of about 6 figures invested in both funds, and I plan to add more to my positions via SPV, to double down on some of the fund's investments. A little bit, about me. So I'm an alum of Columbia Business School, worked in finance on Wall Street, spent time on the buy side at Filter Bank's investment management division. Also spent time doing mergers and acquisitions for JP Morgan. Then after that, I left finance, founded a couple of successful companies based out in Hawaii. I decided to invest in AiSprouts, mainly for 3 reasons. The first one was, access to AI opportunities. I was drawn to the funds because it gave me, access to AI companies that were kind of reshaping, various industries across the economy, to kind of expanding my networks. Admittedly, I spent a lot of time in New York, academically and professionally, and my connections are mainly in finance. And so, however, with Suman, I've been connected to other LPs in the funds who are founders, operators, investors in Silicon Valley. There's also, in-person networking events, which I, plan to attend. And then the third, reason why I decided to invest was that there's great allocation as a co-investor. So, through his relationships with founders and co-investors, Suman has available allocation in insider-only rounds. So in a nutshell, 3 main reasons. One is highly exclusive AI investment opportunities. 2, expand, my network within Silicon Valley, and then finally, we get great allocation as a co-investor. So, happy to connect offline with anyone that may be considering an investment. Thanks.
Perfect. Thank you, Vera. Thank you for that. Just really briefly, before I keep going, just to answer a couple of questions. 80% of the companies I've invested in are based here, but given that a lot of companies are now growing virtually, I'm open to companies whose founders are in other places. So that's led me to investments with teams in Massachusetts. Obviously, there's the Harvard, MIT hubs there. I have a couple of portfolio companies in New York, but they either have an investor or an employee that's based in Silicon Valley, and that's the geographic constraint. I'll get into exactly what I define as an AI company. But in the first fund, it was very much the semantic I used was machine learning, and there were companies that were applying machine learning. And obviously, since then the software stack has evolved quite a bit. But I'll get into that. So why get involved with this group with folks like Vera? I think we're in a once in a lifetime, once in a history of humanity moment where like you're really talking about automation and like artificial intelligence blossoming, and it's basically a tipping point of this massive opportunity that's emerged. I think the wave's going to be bigger than what the internet was, bigger than what SaaS was. It's going to envelop everything. It's dramatically changing the underlying technology stack, and it's happening very fast. Empirical proof can probably be market sentiment towards NVIDIA stock, if you want to look at that over the last couple of years. But it's this $1 trillion paradigm shift towards what I call automation. And it's happening because, algorithms that have been around for a long time, they were researched before, they've become off the shelf. They're available via open source. Data, which is the underlying kind of ingredient to build really AI systems, there's more of it available. You can store it anywhere you want. The economics of data have changed dramatically. And then finally, the real why now moment is the computational power. So, NVIDIA, basically, if you look at just what it's done, the GPUs have improved 1 million times over the last decade, and 1 million times are projected over the next decade in terms of performance. So you're talking about 1 trillion times of horsepower that's coming into something. And that really doesn't happen a lot. And so since 2020, basically nobody predicted how much computational power would really blossom and perform. And that is the moment we are in today. So what I focus on is investing in founders and companies that are building products that's making these artificial intelligent applications a reality. And the abstractions that are coming from GPT, the paradigm, are just the beginning. I think it's an example of how it's going to become easier and easier for you to build really, really intelligent systems. So the plan is, if you envision where we were in the cloud in 2009, imagine if you had the opportunity to invest in the 100 best ideas between, call it 2009 and 2019. That's the pattern that we're pursuing here at AiSprouts. So between 2020 and call it 2030, I believe that there's going to be 100 amazing companies that are popping up that nobody ever even thought of. And we're investing in those ideas and in those companies with the hopes and the aspiration that a handful of those will become the next kind of $1 trillion unicorns. So that's a bit of kind of the thesis, the big vision. The way that I separate the outstanding companies from the ones that would do okay is actually an ingredient. It's an approach that I've refined over the years. And the first part is really focusing on traction. So that keeps me away from taking a lot of technology risk. So I call it science fair projects, and which can work out fine, but I'm less patient about waiting for those to flourish. So I really get involved with founders when they actually have some market proof. And so the recipe is 3. Obviously, people is number 1. That's what separates the great companies. 2 is getting involved with products with demonstrated traction. That typically is early revenue. Call it a few $100,000 of ARR in the case of software. Sometimes it could be a great usage data. Maybe it's an amazing pilot. I have stories from each. And then the last element is a competitive advantage to win the market. So really kind of machine learning as a data mode, something that helps them get increasing returns to scale. So how our fund is different. It's number 1, it's complementary to the lead. Once I find these companies, I don't necessarily look to be the first check. I look to be a complementary check to the lead investor. This leads me to have an initial check size that isn't too big, isn't too small. Again, market-ready technology, machine learning being applied as a superpower, and then bringing my life's work network. So just to wrap up this section, and then I'll get into kind of some of the companies. what founders access from beyond just the risk capital, which is the initial value add, capital introductions up and down and the financing stream to folks like Mercury or other LPs or other institutional funds, basically to remove the friction that founders have in raising capital for follow-on rounds. Second is, from my experience scaling a lot of these unicorn companies, I understand the steps that companies go to as they try to achieve different stages of growth. So not only is it helpful for me to have that perspective, but the fund can actually help connect founders to somebody in a network of a 10,000 person network with the right person, right sales leader, right product leader that can help them get to the next stage. And then finally, these insights that come from these networks often helps companies, recruit advisors, board members, really help them clarify the key milestone. And all of this has come together through this community now that includes a founders boot camp. We do an LP CEO summit per fund, quarterly meetups, et cetera, to really mobilize and activate all of these great people interactions. So just to get into kind of where the fund is and the success we've seen so far, it's really ambition that has driven a lot of the founders to work with us and appreciate our support. A lot of these entrepreneurs don't just want to be successful; they want to really build something that lasts. And what they appreciate is the fact that I've been involved with some of these companies that have really scaled and can bring some of these perspectives to the founders and help access some of this human talent. So here are some examples. Hayden, they've raised 80 million to date. Initially, Hayden, and I'll get into what the company did, probably wasn't the most obvious play, but he really appreciated the insights I had from a lot of the funding community, folks like Autotech Ventures who ended up leading the investment. Then there's Alex, who's enterprise software solution, really understanding of how enterprise software companies scale over time. That's what I've brought to the table. And in the case of Procyon, he was actually recruited his chief revenue officer through an introduction that I provided that initially started as an advisory role. And in the long run, these things may not sound that big, but when you are a seed stage founder with maybe a team of 3 to 8 people, bringing one key contact, one key relationship, one key introduction can really be a game-changing event for the company, and that's what I specifically look to do. So just to highlight, some of the fund one investments, the mix of companies has been everything from enterprise software, climate solutions. We have some, applied space technology, but the core, 40 to 50% of the time, the core is basically enterprise software. This includes, productivity automation solution. I have a sales forecasting company. Then on the computer vision, applied computer vision, there's this company, Hayden AI, we'll get into it, which is basically smart cities. I have some disaster relief technologies that's backed by Chris Sacco, the lower carbon investor, ag tech, space tech. And all of these companies combined have raised, like I mentioned before, 150 million of follow-on capital. The largest has been 80 million by Hayden, followed by 40 million, and then I have a couple at 20. So really dramatic validation of market interest when the companies are scaling and they're growing. It ends up being about 800% year-to-year growth.